If you are buying this market up here, S&P on a weekly chart at 22, closing basis today at 22.65. Let's see if I got that right. Yep, 65.25. If you are buying this market up here, you need a saliva test. You are nuts. I don't care if you are a trader. I don't care if you've never been in the market. All I got to say is if you are buying this market, you're not dumb money. You are the dumbest of the dumb money. Folks, you know, everyone has been posting chart after chart after chart. They have chart blindness. They don't know how to read a chart. They are illiterate if they are buying up here. Are you telling me that every person who has bought the S&P in the last 200 years of this country is a genius? If you are, I'm not buying it. But let me just show you what you're looking at. This is a weekly chart of the S&P futures contract on a weekly basis. This is the March 9th low. Okay, this was down in here. You notice how the market lifted off. Okay, there was no hint of Trump. There was no data that mattered. Okay, but the markets just magically lifted off. This was the immaculate recovery, okay, otherwise known as federal intervention, as in money manipulation, as in we shook out all the shares out of the pockets of the suckers. Now the banksters got it down here nice and low. We're gonna buy it, and maybe several years later when we're up in here, we'll sell it to their kids and their grandkids. We might even catch some of the suckers that sold Home Depot down here at $40 a share and have them buy it up here at $140. Holy smokes. Folks, this is a carnival game. But let me show you a Fibonacci. Even Kramer was talking about the Fibonacci queen. You don't have to be a Fibonacci queen. You don't need to be a Fibonacci king. Okay? Fibonacci is rolling over in his grave. You draw it from here is the A point. Here is the B point. Here is the C point. It's elementary. Usually stocks or markets will stop at the 100% extension and pull back nearly 50% from there. That would have been normal. But no, this market has kept going past 100%, past 138. The 161 extension would have been 2156.2 up in here. My charting software, well, I think Fibonacci has another 2 or 3 levels. Maybe we're going there, but they're not taking bagger with them. We are now well beyond, we are 100 points beyond the 161 extension of the entire weekly move. And then when you look at the RSI, one of the most reliable indicators, no, it is not an overbought territory, but that is not a good sign. Because you can see that back here it was overbought, back here it was overbought, back here it was overbought. And look what happened in here during the corrective phases, the big pull downs. So what we have here is divergence. It is making new highs, higher than it was back here and back here and back here. And yet the RSI can't even get up there. There's nothing behind this move. And then the percent B, which we love on the Bollinger, the percent B is actually flashing as well. A rejection of higher price. Almost a head and shoulders on the percent B itself. Folks, we are in imminent. I can hear the thunderous water from the waterfall. Don't get sucked in. Okay? Let the banks choke on this paper. It's going to be worthless. We could pull back all the way down to 1400 and have the uptrend still in place. And you'll be puking. You'll be listening to CNBC, the Contrarian News Bubble channel, markets in turmoil. I don't know what the event is. I don't know if it'll be an event. It could be just some good old-fashioned selling. But chances are they won't let you out, and they may not let you in. If you are of the aggressive kind and want to short this, please use options, protective options. Should the dumb of the dumbest dumb money come in even more and push things higher, you want to have some protective options up above here to protect yourself and potentially even raise your cost basis should you decide to short this market. Yes, the trend is up. Yes, every stock pimp from the East Coast to the West Coast has been selling you this crap for the last 8 to 10 years. Folks, this is not the place to buy the S&P, and the other markets are just as bad. It's a distraction. So get an education someplace. You won't get it from your broker. Maybe from a financial planner if he's a fiduciary, but you're not going to get it from the brokers. You're not going to get it from the media. Okay, and if you want to follow us, feel free. I'm Bagadon at stockmarketcaddy.com. Just consider this a PSA, a public service announcement. Oh yeah, by the way, let me just show you what our members get to view day in, day out. We show them. It's not going to get past us, folks. Okay, we are an algorithmic trader, investor. So we know when the markets are rising, we know when the markets are falling, literally tick by tick. But this is ridiculous. Good luck. Be careful.